is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome. You're watching Muhurat Trading live on Business Today Television, presented to you by conglomerate partner Darwin Platform Group of Companies. I'm Sakshi Batra and with me is Shailendra Bhatnagar. And here's wishing all our viewers a very happy Diwali and a prosperous New Year. As we say goodbye to Samvat 2079 and welcome 2080, a hindsight view portrays a roller coaster year with benchmark indices still managing to clock in double-digit returns and investors also getting wealthier by almost 45 lakh crore rupees this time. But the big question is, will the new Samvat also bring in as much more prosperity and even more? We'll tell you all of that in this very special session, but first up, the top headlines this hour. Stock starts the new Samvat on a strong note as India emerges as an island of safety and strong returns over the past year. Top market men advised to remain invested in a market that still has a long way to go. Government PSUs and metal counters are likely to hog the limelight in Muhurat trade as rising open interest and stock prices entice traders on the long side. Welcome to all the viewers and happy Diwali to you, Shail.
Good evening, Sakshi, and it's such a pleasure to welcome you back on such a fine evening. We've seen a masterclass of batting that's just happened in Bangalore by the Indian cricket team, and we've seen a masterclass of investing over the last 1 year or so as far as the Lal Street is concerned. Things are looking good, and in fact they're about to get better. Let's, without wasting even a second of time, reach out to our guest. It's the very well-known market man, Mr. Anand Rathi, Chairman of Anand Rathi Group, who's joining us in just a few seconds. Mr. Rathi is a very, very well-known face, and over the last 18 months, his company has also got listed. Anand ji, namaste. स्वागत है आपका बिजनेस टुडे, और संवत की शुरुआत बड़ों के आशीर्वाद से हो जाए, इससे बढ़िया और क्या उपलब्धि हो सकती है। स्वागत है आपका। बताइए, सन 2080 का संवत आपको कैसा लगता है?
धन्यवाद शैल एंड साक्षी, आप लोगों को और आपके सारे दर्शकों को मैं सबसे पहले इस दिवाली की शुभकामनाएं देना चाहता हूं और नए वर्ष की भी शुभकामनाएं देना चाहता हूं। 2080 जो है, मेरा मानना है कि अच्छा साल है, क्योंकि आप देखिए अभी पिछले 6 से 9 महीने में जिस तरह का बदलाव अपने देखा, जीडीपी की ग्रोथ बराबर आ रही है, इन्फ्लेशन कम होता जा रहा है, इंटरेस्ट रेट आगे बढ़ने से रुक गई हैं, ऐसा माहौल इंडिया का तो माहौल, और सबसे ज़्यादा अपनी जीडीपी ग्रोथ आ रही है वर्ल्ड में, तो सारे सुकून जो हैं वो अच्छे सुकून नज़र आ रहे हैं। और इसलिए मेरा मानना है कि 2080 भारतवर्ष के लिए, विशेषकर मैं कहूँगा, अपने लिए एक अच्छा वर्ष रहेगा।
Mr. Rathi, happy Diwali to you. Thank you so much for taking the time out to meet us and to take your time out to be with us on this show. I wanted to ask you, sir, what is the biggest learning that you have picked up in the last 1 year? Because learnings also help us to grow as an investor, and I want you to part some of that learning to all our viewers today.
Yes, Sakshi, I think this is a great learning which I want to share, but this is not just last year's learning. This is all the learning which I've learned in this market is the patience, I think not to time the market. Last year we have seen markets going up above 20,000 and going down below 17,000. So if you can see 15 to 18%, difference between the top level and the lowest level, I think people get frightened when markets have little bit changes. When markets come down by even 500 or 1,000 Nifty points, people get panicky. I think my advice and my experience is never get panicky. If you are invested in this market, come for, only if you are for a long term money. Again, my advice is don't come for few months or 9 months or 1 year. Come for at least 3 to 5 years. And if you are there, then there is no need to time the market. Let market fluctuate on its own, because if the economy is doing well, if the corporate sector is doing well, I think there is no doubt that you will do well. And we have last so many years. 79 the Sensex started. Now we have completed more than 40 years, and you have seen in 40 years it has given, if you take accumulated return, more than 15% return. So I think one should be patient. One should not get worried about the fluctuations in the market. Stay invested.
Ji. Anand ji, I'll just take a 1 minute detour. The pre-open trades are in front of us, and the Nifty has started exactly like Shreyas earlier, 122 points up at 19,550. Sakshi, all 10 index heavyweights are in the green, led by Tata Motors 1% higher, 658, HDFC Bank 0.5% higher, 1500, Reliance up 0.5%, 2326, and Infosys up 0.8%, 1380. We'll keep an eye on these stocks, but it's more important to talk to Anand ji at this moment. Rathi sahab, where is fresh money going to come in as far as the new Samvat is concerned? Nifty hasn't performed much, up 8% Samvat to Samvat, but sectors like PSU banks are up 55%. Mid caps and small caps have rallied very sharply. So fresh money, when you advise to your HNI clients, where are you putting that money?
Yes, I think जो आप कह रहे हैं कि अगर एक साल के लिए के व्यू लेना, तो डेफिनेटली आज के फ्लेवर ऑफ द डे सेक्टर्स कौन से हैं, तो उसके बारे में मैं कहूँगा कि जैसे आईटी इज ऑन टर्न अराउंड. सो आईटी इज वन सेक्टर लोगों को देखना चाहिए जरूर. फार्मा इज अगेन अनदर सेक्टर टू लुक एट, डूइंग वेरी वेल. थर्ड सेक्टर जो अपना बैंकिंग और फाइनेंस, अभी भी मतलब दो दे हैव पिक्ड अप ए लॉट, मेरे हिसाब से अभी भी उनके लिए बहुत आगे बढ़ने की गुंजाइश है, क्योंकि बैंकिंग फाइनेंस किसी देश की अर्थव्यवस्था का जो है, वो जो फाउंडेशन होता है वो बैंकिंग के ऊपर होता है. और अभी जो आपने देख रहे हैं स्थिति जो बैंक्स की और एनबीएफसी की, इनकी बैलेंस शीट जितनी मजबूत देखने को मिल रही है, जितनी उनके एनपीएस कम देखने को मिल रहे हैं, जितनी ज़्यादा प्रॉफिटेबिलिटी देखने को मिल रही है, ऐसा अपन ने पहले नहीं देखा. तो वो एक सेक्टर जो है वो अच्छा नज़र आ रहा है. वैसे मेरे मानना है शैल भाई की, चूँकि इकोनॉमी इतना अच्छा कर रही है, इंफ्रास्ट्रक्चर फॉर एग्जांपल विल डू वेरी वेल. क्या कई स्टॉक्स काफी रन गए. ऑटोमोबाइल में जैसे टू व्हीलर है, दैट ऑफर्स ए ग्रेट अपॉर्चुनिटी, क्योंकि पिछले कुछ सालों में टू व्हीलर्स में प्रॉब्लम आ गई थी, परंतु ये उतार चढ़ाव चलता रहता है. आगे आने वाले टू व्हीलर इज गोइंग टू बी अगेन लाइफ लाइन इन इंडिया. आज अफोर्डेबिलिटी एंगल से किसी गांव में सेट, हर घर में एक व्हीकल जरूर चाहिए. तो ये कुछ सेक्टर चुनिंदा जो आपने पूछे हैं, पर मेरा मानना भैया कि लॉन्ग टर्म स्टे इन्वेस्टेड. अगर आप स्टॉक्स लेना चाहें तो जरूर समझ के लीजिए, अदरवाइज म्यूचुअल फंड के जरिए जाएं, ताकि एक वो आपका डाइवर्सिफिकेशन इज ऑल्सो मस्ट, विच विल हेल्प. You may not get the best of the returns, but you will get good average returns.
Okay. Mr. Rathi, I also wanted to get a macro sense from you. Over the next 1.5 months, we are going to be seeing 5 state elections. Now, keeping in mind that, the current government in these states seems to be on the back foot, how do you think the markets will be navigating over the next 1.5 months?
Very good question, Sakshi, because we have seen so many elections, and my experience has been elections are a big event. So ever before election, after elections, you will see action coming on the market. But we have analyzed for last 25 years. If you take an index 1 year after the election, okay, particularly the central government election, it has always given double-digit return. So elections have an event. India की progress हो रही है, not just because of the government alone. Governments have changed, but India has progressed because one major, strength we have is our entrepreneurship. अपने यहाँ के जो व्यवसायी लोग हैं, जो बिजनेसमैन जो एंटरप्रेन्योर्स हैं वो काफ़ी हिम्मत वाले हैं और रिस्क लेके, तो इसलिए एंटरप्रेन्योरशिप के चलते ब्यूरोक्रेसी अपनी इतनी इज बिकम वेरी स्ट्रॉन्ग ओल्ड ब्यूरोक्रेसी। ग्रोथ आएगी जरूर साक्षी, मेरा तो विश्वास है कि आगे आने वाले 10 साल गोल्डन ईयर्स है इंडिया के लिए। एंड आई थिंक पीपल दोज यंग पीपल लाइक यू आर born at the right time and to take advantage of this great golden period for India.
आनंद जी, आपका जो गोल्डन पीरियड है वो भी अभी शुरू ही हो रहा है, मैं आपको बता रहा हूँ। इतना ज़्यादा पैसा भारतीय बाज़ारों में आ रहा है, इतने ज़्यादा अल्ट्रा एचएनआईज आते हैं, और आनंद राठी वेल्थ में जितना पैसा आप मैनेज कर रहे हैं, प्रभु उसकी दुगनी और चार गुनी आपको उन्नति और तरक्की कराता हुआ दिखेगा। आज एक और बहुत इंटरेस्टिंग स्टैटिस्टिक्स मैं आपको बताऊं। प्री ओपन ट्रेड में आनंद जी 50 के 50 निफ्टी के शेयर हरे निशान में हैं, और एफएनओ में लगभग हम 189 शेयर्स ट्रैक करते हैं, जिसमें से सिर्फ 3 हैं जो लाल निशान में हैं। तो आप समझिए कि सन 2080 संवत की जो शुरुआत हुई है वो एक धमाकेदार पारी के साथ हुई है, और यहाँ पर आप बहुत बढ़िया रिटर्न देख सकते हैं। आनंद जी, ज़रा विस्तार से चर्चा करते हैं बाज़ार के बारे में। ये जो हमने रैली मिड कैप्स और स्मॉल कैप्स में देखी है, पीएसयू बैंक्स में देखी है, 51-52% ऊपर पीएसयू बैंकिंग इंडेक्स है, 37% ऊपर मिड कैप स्मॉल कैप इंडेक्स है। क्या आप इनसे चिंतित हैं? क्या ये बाज़ार कुछ समय लेगा इन सारे गेन्स को डाइजेस्ट करने के लिए, फिर आगे बढ़ेगा, या एक तरफा आपको तेज़ी दिखती है?
नहीं, देखिए, मैं चिंतित नहीं हूँ। इसका मुख्य कारण यही है कि ये जो भाव बढ़े हैं वो अपनी स्ट्रेंथ पे बढ़े हैं, ऐसा नहीं है। परंतु ये कहना कि भाई इसी तेजी से आगे बढ़ेंगे वो संभव नहीं है बिल्कुल। कभी 50-55% ग्रोथ आगे आ जाएगी, ऐसा नहीं। ग्रोथ आएगी डेफिनेटली। दिस इज नॉट समथिंग जस्ट ए स्पाइक बाय चांस। ये बेस्ड ऑन इनकी रियल ग्रोथ जो आ रही है उस सेक्टर में, इसीलिए ग्रोथ आ रही है। तो मेरा ये मानना है कि इवन देखिए मिड कैप स्मॉल कैप, मेरा मानना हमेशा लॉन्ग टर्म में लार्ज कैप से ज़्यादा रिटर्न देंगे। इसका मुख्य कारण ये है कि भाई जिसका छोटा बेस है उसकी ग्रोथ ज़्यादा आ सकती है, और ये वही है। तो हालांकि होता है कि भाई मिड कैप की सारी कंपनियां इतनी अच्छा शायद नहीं करें, परंतु एज ए ब्लॉक मिड कैप स्मॉल कैप जितनी तेजी आई है उससे कोई झुकेगा नहीं। हमारा अभी भी हम लोग बुलिश हैं स्मॉल कैप मिड कैप में, कि उनकी परफॉर्मेंस, क्योंकि एक्चुअली लार्ज कैप में जल्दी से सैचुरेशन आता है, क्योंकि वहाँ इन्वेस्टमेंट जितना आना आ जाता है, परंतु मिड कैप और स्मॉल कैप में आगे आने वाले समय में इस 1 साल और आगे वर्षों में मुझे उनमें अच्छी ग्रोथ आती नजर आती है।
Okay. Mr. Rathi, I would request you to stay on with us. I'm also now joined by another guest of ours on the show. Mr. Akshay Bhagwat now joins in. He is the Senior Vice President Derivatives at JM Financial. Mr. Bhagwat, happy Diwali to you. Thank you for taking the time out. The first question that comes your way is, what should one do with the Nifty after this gap up that we are looking at?
Happy Diwali to you, Sakshi and Shailji, and also to Mr. Rathi, and to all the viewers of Business Today. May your portfolios be bright and sparkle as the lights of Diwali. So to answer your question, Sakshi, about the Nifty index. Well, it's a very auspicious day and a very nice way to start the Muhurat Samvat 2080 for the Nifty index. As I see right now, I think today, as we have seen the past couple of years, Nifty has always been strong on the Muhurat trading sessions. So, buying is what I would recommend at 19,540. I think if you were to see from a positional or a medium-term perspective, there might be challenges here and there, but I think if there is only one way for the index to go, and that is on the upside. So I am bullish on the index. I'm targeting all-time high as we head into 2024, and buying is what I would recommend to all the investors of Business Today.
Right. Let's just look at the opening rates. The Nifty is up 94, 95, 19,525 in front of you. It's a 150 point start up for Nifty Bank, 43,978. Both the IT and the Nifty 500 index are in the green. Amongst the index heavyweights, it's Infosys 1% higher, 1383. Sakshi, one good thing is that all 10 index heavyweights are in the green. Reliance 0.3% higher, 2323. HDFC Bank 0.4% higher, 1498. All other private sector banks, ICICI Bank is in the green, 941, up 0.2% higher. Axis Bank is also in the green, 1029. That's how markets have started. Within the Nifty, the top gainer at the moment is Coal India, 3.2% higher, 334. Aisha Motors 1% higher, 3578. NTPC taking it away 1.4% higher, 246.50. Let's look at NSE 500 again. It's a blowout on the Bombay Stock Exchange, 6% higher, 2140. We have very strong gains coming in into CDSL, 1830, 3% higher. Medanta 4% higher, 940. Coming to you आनंद जी, अक्सर दस्तूर रहा है दिवाली पर और ख़ासकर मुहूर्त ट्रेडिंग पर कि कुछ ना कुछ खरीद के निवेशक अपने घर ले जाता है, चाहे वो शेयर हो, चाहे वो फंड हो, चाहे वो बहुत अच्छी राय हो. राय आपने अच्छी दे दी, अब बताइए खरीदा क्या जाए.
देखिए, आपको पता है मैं इंडिविजुअल स्टॉक्स पे नहीं कमेंट करता हूँ, परंतु जैसे मैंने सेक्टर्स बताए उसमें आदमी अगर देखे और उसमें करे इन्वेस्ट तो डेफिनेटली देखिए अगले आने वाला 1 वर्ष और कई वर्ष मैं बड़ा ऑप्टिमिस्टिक हूँ, पॉजिटिव हूँ, क्योंकि मैं जैसे पहले भी मैंने कहा कि ये गोल्डन पीरियड इंडिया का अब चालू हुआ है, जिसको कहना चाहिए, जिसमें जो है अगर 25 साल में जाके अपने 25 ट्रिलियन डॉलर की इकोनॉमी हो जाए या 30 ट्रिलियन की हो जाए तो देखिए कितना बदलाव उस समय आपको नजर आएगा. उसका एडवांटेज लेने के लिए आदमी को अभी से ही मार्केट में पार्टिसिपेट करना चाहिए.
All right. On that note, Mr. Rathi, thank you so much for sharing with us such valuable insights on Diwali. Here's wishing you a very happy Diwali to your team, to your family members yet again. And thank you so much for speaking to us on this auspicious occasion as well. Ladies and gentlemen, we'll just take a very short break right now. When we return, the conversations with top market voices continue to find out how is Samvat 2080 going to pan out. Stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome back. You're watching Muhurat Trading live with us on Business Today TV. I'm Sakshi and with me is Shailendra Bhatnagar. Also with us is a very special guest. Mr. Akshay Bhagwat is with us from Senior Vice President Derivatives JM Financial. Yes. Also joining us is a very special guest, Mayuresh Joshi, Head of Equity Research. William O'Neill will also be joining us very shortly. But Shail, looks like it's going to be a bumper session today.
Yeah, Sakshi, it's going to be a great day. Some of the stocks that we've tracked for so long are doing fantastically well. CDSL is something that we had cracked at about 15.15. Fresh record high here, 18.38. KPIT is taking it away, 13.99. Strong moves coming in on Coal India, 3.5% higher, 3.34. And Suzlon, 38.75. Fresh moves coming in through. Mayuresh Joshi joins us, our very dear friend, with an extremely strong sense of what to buy at the right point of time. Good morning, good afternoon, Mayuresh. Diwali greetings to you and to all your team members. What looks good on the chart, given the kind of performance that we've seen by the Nifty? A century at starting point. It's taking a lot of enthusiasm from the way the Indian cricket team has batted at Bangalore. I hope Mayuresh can hear me. I could hear you now, Shilendra. Diwali greetings.
Mayuresh.
What are you buying for today? Muhurat Trade. Diwali greetings. What are you buying for today? Muhurat Trade.
Very good evening to you, Shel sir. Good evening, Sakshi. A very, very happy Diwali and a summer 2018. Hope it brings a lot of good joy, health, peace, prosperity, and wealth to you, your loved ones, and all the viewers of business today.
Thank you. Thank you, sir.
What we're probably looking is the capex theme, and that probably still continues. I think one stock which we had in our last Diwali portfolio, Action Construction, did exceedingly well. We are replicating the similar story through Sangvi Movers. So I think that is one stock that probably remains on our radar. Top line growth has been very, very impressive. The expectations in terms of the additions that they have done to their fleet, specifically the 110 cranes and the 750-ton cranes, they have done decent additions there, the capex of 250 odd crores. And even with the capex that you've probably seen, the debt equity stays very, very manageable at 0.34 times. Having said that, the expectations in terms of the yield that can come through, because utilization levels at 83% is expected to ramp up in the next 2 quarters, as a lot of government projects in lieu of elections get completed and a lot more get announced in terms of the order book, which lies in excess of 500 crores for this company. So something that we're probably looking and eyeing is Sangvi Movers.
Wow, and what a start, Mayuresh. Already a 5% surge, just like how you're talking about, people are picking it away as well. And happy Diwali to you once again. It seems to be a bumper session. Apart from Sangvi Movers, I wanted to understand from you your thought process on the entire auto basket. Are these going to be stocks, maybe the key players from the OEMs market or from the ancillary space, are they going to be the big drivers in the new Samvat?
They will, Sakshi. Season's greetings to you as well and happy festivities as well. Shubha Diwali, as we say. So to a large extent, what we probably witnessed in the last 4 to 8 quarters have been exemplary for the industry as a whole, whether they are two-wheelers, four-wheelers, or even the commercial side of things and the auto ancillaries as well. So we're definitely having an eye out for the sector as a whole. A lot of the headwinds that we faced in terms of semiconductor issues, in terms of input cost inflation, is largely behind them. Footfalls, the demand story still continues. Look at the growth just on the terrace. Close to 55,000 cars have got delivered. I don't even know the bike number. It will be far higher if I have to put it that way. So I think the positive story probably continues. And don't forget the auto angs, Sakshi. Minda Industries, Minda Corp, you've got the battery makers like an Exide, Amara Raja. Expectation is that both the OEM and the replacement market should do exceedingly well for them, holding up their earnings as well as return ratios. One can argue about valuations at this juncture when it comes to the two-wheeler pack, certain stocks in the four-wheeler pack, including the likes of Tata Motors and M&M. But I think earnings will readjust themselves if you go into the next 2 to 3 years. And therefore, they might be in the mid-cycle of their overall price earnings trajectory as well. So yeah, in a nutshell, auto ancillaries look good for the user.
Sakshi, we'll have to pay a little attention to options trade. As you know, in your absence, we started a lot of coverage on futures and options. Akshay is with us, and just the right time to request him to look at the 19,500 Nifty call for 16th November, which is now trading somewhere like 84, 85 rupees. I understand that there has been a gap up, Akshay, but the good point here is that the Nifty has moved very sharply from its intraday low, which basically means that a lot of shorts will now be covered. I'll just tell you, the low was 19,518 and at the moment 535. What do you say about this option call 19,500? Is it something that you'd like to get into, or is it too hot?
Well, it is too hot considering the fact that it's a strong gap up. And secondly, if you look at the highest open interest placement for the 16 November expiry, still the call writers are still adamant and they're holding on to their bets at the 19,500 strike. So I would have loved to see unwinding strongly at this strike post a gap up opening. But till now, the call writers are holding on to their bets. So I would wait it out at this point and not jump to buy options, being a a very sensitive product to the options. So I would say let's wait it out for buying this call. Probably, I think tomorrow might be the right time once we figure out how the 19500 call writers are playing it out at this given point.
Okay, not a problem. Mayuresh, to you and Akshay both, what's happening in CDSL and Bombay Stock Exchange? You go first, Mayuresh.
Well, I think it's been an exemplary move, specifically, Shelter, in the case of BSE. I mean, the returns have been phenomenal over the last 6 months. The new products that they've introduced are obviously gaining a lot of steam. And obviously, the kind of volume activity that we've probably seen with a lot more optionalities that have got introduced by BSE is probably playing a lot of focus in terms of their earnings trajectory as well. What it really does is it ramps up not only their transaction revenues, but even the annuity side of the business holds up pretty well. Again, one can very well argue how our valuations placed. Obviously, I think they are sky high at this point of time as we speak, and therefore the momentum might continue. TDFSL obviously becomes a proxy to BSE, being one of their arms of BSE itself. Again, the kind of subscription growth that we've got, the kind of demat growth that we're probably looking at, and the kind of revenue streams that they have, the proxy play, because BSE has moved so much, I think gets played on with CDSL as well. So both are momentum plays. But again, I think one should have the risk management tools in place to have a profitable exit, just in case these stocks probably come off in the coming few weeks.
Okay. Akshay, I'd like your opinion on CDSL, please. With the kind of move that we've seen, it's stunning. Last 1 month, 32% surge. Last 6 months, it's been an exemplary 85% move on the stock. 1 year perspective, Samvat to Samvat, 46% surge for this one. What is your, call on this stock now?
The chart structure look absolutely fantastic. It's all-time highs, and even the 2022 all-time high levels have been breached at the levels of 1650. So that puts the stock on a very firm footing. But I would suggest that if you want to take a fresh buy position at this given point of time, then be more of a medium-term buyer than for a short-term to play the momentum. The targets are 2000 plus. It might take some time considering the fact that on the short-term parameters, the stock is a bit overstretched for comfort. So a positive view, 2000 plus in the making in the stock, 1650 is the support. It is just that invest with a slightly longer term horizon, probably a month or 2 months time would be good enough for a target of 2000 plus in CDSL.
Okay, let's also look at the kind of move that we are looking at on the metals pack as well. A lot of stocks buzzing, especially Hindustan Copper, that's the top gainer in the F&O space today. We also have, even the NMDC counters, Steel Authority, Jindal Stainless, Nalco, all of them up by 1.5–2% odd. Mayuresh, I'll take your view here. The metals pack is up 14% Samvat to Samvat. Any particular call that you would like to share for Samvat 2080? Any metal counters that would shine away?
So Ratnamani Metals is something that one should keep on your radar, Sakshi. I think what they're probably doing in terms of their capacity enhancements are in the right direction. And both the capacity enhancements from a value-added perspective are going to play big dividends when it comes to earnings growth. The second element in terms of pricing for their key products are expected to remain extremely stable. And as they move up the value chain in terms of VAP or the value-added products itself, and a good control in terms of their backward integration process as well, a lot of stability in terms of EBITDA margins can probably be expected from this stock itself. The capex that they put in from internal approvals will not load up the debt too excessively, and therefore I think the return ratio, specifically ROEs and ROICs, should remain relatively strong for this counter within the metal index. So I think Ratnamani Metals is something that I'll have my eye for.
Right. Let's pay some attention to what is happening on the options side, Sakshi. We had discussed the 19500 call at the moment. It's now trying to take out its earlier drop that we have seen, 83.68 in front of you. Let's see how the stock moves. As far as the index is concerned, now 113 points higher 19,537. Why I mention this is because 19,545 is the intraday high for the index. If it takes out this one, then this particular call will be in action. I just also wanted to point out stocks that are at all-time highs before we welcome Vaishali. There is a Bombay Stock Exchange that we've discussed. New stocks in this list are Sonata Software, 1344, 2% higher. Jindal Saw, 1.4% higher, 494. Credit Access is something that we had discussed with Mr. Devina Mehra. It was his top pick, 1714, up a percent. Oberoi Realty, Trent, Fortis, and Karur Vyasa are the list of stocks that are now at an all-time high. Akshay, we've already seen the first 15 minutes of trade. Anything that catches your fancy on the technical charts which can be had on the long side?
Well, you can look at the power space here. I'm bullish on NTPC. So NTPC has a very strong chart structure, and even if you look at the opening trades, the move has been pretty positive here. Although right now it is around 245. My belief is that it is soon getting past the levels of 246, 247, which would be a short-term breakout zone for NTPC. So I'm positive on the power sector. NTPC would be the best bet among the stocks in this sector, and I look forward for a target of 260 plus if you are betting from a trading perspective. The support here is around 239, so your stops should be below this support, and keep a target of 260 with a time horizon of a week.
Okay. Mayuresh, just last one question to you before we let you go, and that is, you know, a blockbuster pick that you can share with us, a dhamakedar pick for the new Samvat for all our viewers. That's the thing that they want to know from you.
Oh yes, and I think all of us would have had plenty of sweets, plenty of namkeen.
Yes.
I think the best revenge is buying a stock which probably does the same. So I think Bikaji Foods is something that I would
Bikaji.
somewhat. I think the volume growth has been really good this time round. The expectations in terms of capacity enhancements and additions that they are doing, specifically in terms of namkeen and the ethnic portfolio, should boost volumes quite significantly in the next few quarters. Obviously, I think the competition both from the unorganized players is pretty large, and some of the fewer larger organized players as well. There is sufficient room to grow, and that will get reflected in terms of improvement in both gross as well as EBITDA margins. The second aspect, obviously, I think is how they're probably managing their portfolio at this juncture. So it's ethnic sweets, the package sweets that they've probably got, and the right mix probably to ensure that operating leverage gets played out on the balance sheet. So I think a sweet revenge of sorts in terms of Bikaji Foods is what we are probably looking at.
Wow. All right. Well, thank you so much, Mayuresh.
Right. And on this very sweet note, on this very sweet and namkeen note, we'll thank Mayuresh and wait for our next guest, who's going to be Mr. Devin Choksi. Mayuresh, all the best wishes to you. May the Samvat of 2080 be better than 2079.
Thank you so much, Shel sir. All the best to you, Sakshi, and the entire team at Business Today, and all the viewers who see this.
Thank
and
you.
again, I'd also like to wish Devin sir, he's there on the screen. So
Yes.
very happy Samvat.
Mayuresh. Hi Mayuresh, I think.
क्या बात है?
Right. Okay, let's get Akshay in now. Akshay, you know, anything that you've spotted in the last 15 minutes or so, something that is going to be a multi-bagger this Samvat?
If you're looking at multi-baggers, I have a couple of stocks in mind here.
Okay.
One is from the mid-cap space. One is Dilip Buildcon. So Dilip Buildcon has a very strong chart structure. The volumes indicate that the stock is in a possible accumulation zone. I'm possibly targeting a very big move, probably till next Diwali. You know, you can get targets of around 450. It trades around 374 right now. So a stock basing out at 200 to 20 odd area, good accumulation around the zones of 300, and a very positive technical setup. I would recommend you go for buying in Dilip Buildcon. That's my first pick. And you can look at Goldium International. That's the second pick, which we have also recommended to our clients at GM Financial. Again, a very strong chart structure here, a strong base formation at 120, very positive chart structure, and we look forward for targets of 170 to 182 within a time frame of 6 to 12 months. As a risk management, you can keep a stop loss of 118.
Right. Let's look at the markets for a moment. The Nifty is now up 108 points, 19,534. Bank Nifty ticking along merrily, 175 higher, almost 44,000. And the Nifty IT index 240 points higher, 30,875. Netherlands are on 11 runs with the loss of 1 wicket, and 4.2 overs have lapsed. Devin Bhai has joined us. Good evening, Devin Bhai. What a pleasure to welcome you on Diwali. Festive greetings to you. How does the market look to you in this Samvat? Where are you deploying excess cash?
And wishes and prayers for a very happy and prosperous 2080 Samvat year. May God bless all. I think with the kind of good success that we all are expecting out of 2080 Samvat year. Well, I think the pointer is very clear. 2080 has started or is starting with a good amount of opportunity in front of us. On one side, we are having significant amount of traction in with the consumer spending huge amount of money in every which way. Wherever you go, and I think probably experience the festivities, you are probably finding the consumer is spending money. So I think the consumption would be the theme which will continue in 2080. On one side, the consumption, industrial product consumption, because of the higher amount of money getting spent on infrastructure, higher amount of money getting spent on industry because of the PLI schemes and all. And also because of significant amount of money getting generated in the hands of rural India due to the agricultural crop. I would think that I think the consumption would be a perfect theme in the hands of individuals. The individuals are significantly, I think, growing their bank books as well because of the fact that the economy is growing simultaneously. Already we are about I think 3.8 trillion dollar economy, and we are expected to go into the territory of around 11 to 12 trillion dollar economy come 2035. Given that situation, higher amount of money in the hands of consumer is basically propelling the growth into the corporate sector earning book. So we keep our theme absolutely very clear, but consumption is going to drive the entire economics. And so the companies which are catering to this consumption theme would definitely make more sense for investment portfolio, be it discretionary and non-discretionary. We think that I think this is the theme which one should follow in 2018.
Okay, Devin sir, stay on with us. We'll take a very short break right now, but when we return, we are now going to be joining us. It will be Vaishali Parekh, Vice President Technical, Prabhudas Leeladhar as well. And the stock picks that you need to know for the Muhurat trading session will continue on the other side.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome back. You're watching Muhurat Trading Session live on Business Today TV with me, Sakshi and Shell. With us also joining us are now two very special guests. Devin Choksi is with us, and also joining in is Vaishali Parekh, Vice President Technical, Prabhudas Leeladhar. Happy Diwali to you, Vaishali. Thank you for taking the time out. Tell us that stock pick that you've picked out for the Muhurat Trading Session that investors are waiting to hear from you.
Very, very happy Diwali and a prosperous new year to all of you. Yes, so the few stocks that I'm looking at, it would be for a long-term trade. One would be Ashok Leyland that we are looking at, and the other one I would now look at in the banking counter, of course, SBI. So that has not really performed, and now I think it's on its way because we saw a good strong opening, but it's just shown some profit booking. But I think it is a good level to accumulate from here on. And as far as the mid-cap stocks are concerned, I'm looking at Jindal Stainless. It's got into a momentum, and I think for the positional trade also at 483, I would look at further high targets of around 510.
Okay. Welcome, Vaishali. A very, very warm greetings to you on Diwali. And we'll keep Ashok Leyland, Jindal Stainless, and of course State Bank of India in mind over the next 6 months or so. Your very quick view on the Nifty from now on. How do you feel? 19,500 is with the bulls.
So I would say Nifty actually is showing a bit of sluggish move. There is resistance at 19,600, 19,650 as a near-term target resistance. So only if we move beyond that, I would see there is a probability of further run-up going towards 19,800 because we've seen a one-way rally coming right from 18,800 to now 19,600, 650. That is a resistance. So I would say not in a hurry. Let's wait and watch. If we move past that, it calls for further steam on the higher levels.
Okay. Got that. Devin sir, I wanted to understand from you, you talked about some specific sectors that you are feeling positive about at the beginning of the new Samvat as well. But specifically on the mid and the small caps, the outperformance that they have shown in Samvat 2079, 31, 37% kind of a surge. I mean, is it possible for these spaces to outperform for a second year running again?
So generally seen that ahead of elections in for 6 months, I think normally all these small mid-cap companies would continue to participate and along with the market. However, I think this time around, probably participation has been far more earlier. But to a greater extent, I think whether that will continue will be a question mark. Largely because of the fact that most of the mid-cap, small-cap companies, they are far overstretching their valuation metrics. Or even I think companies like, say, for example, new generation companies like Zomato, I think the company moment it started registering the profit, the market gave it a thumbs up and scored the market capitalization 3 times from what it used to be. At one point of time it was 40, now it has become 120 plus. I think you 1 lakh crore worth of market capitalization with a profit base of less than 100 crore. Even though if it compounds at the rate of 50%, still I think it's a far more stretched valuation. According to me, I think this is where one will have to be concerned about and careful about. Any companies which are moving in the direction of, I think, higher market capitalization without commensurate profits, probably I think you might see some amount of disappointment as well. So we tell investors that I think stay careful, maybe some profit booking in some of these companies, and I think re-enter when the market gives opportunity at a lower levels.
Okay.
Okay. Devin bhai, if you look at the stocks of how Bombay Stock Exchange and CDSL are performing, is this a time to get worried about, or this is par for the course? Vaishali will also offer her technical inputs of both counters, but stunning rallies on both of them. CDSL has just started. BSC was 500 rupees in April. It's 2200 in November.
Yeah, I think again, the potential wise, I'm not doubting the potential of the exchange because exchange business is one such business which is not commonly operated by everybody. So there is an entry barrier, there is a restriction. At the same time, I think the growth opportunity in exchange business would be multifold for sure because of the fact that I think today the daily volume is say 70 lakh crore. I think with the market capitalization surging to say $12 trillion from $4 trillion now, which is at about 3 times or 4 times in next 10, 12 years, the volume would probably go up disproportionately higher and not in the same proportion. So from that perspective, I think there is no doubt in my mind that in next 10, 12 years, I think you are going to see significantly large amount of business going to the exchanges, be it BSE, NSE, MCX, whoever they are. But at the same time, I think most important to understand that these businesses are also going to work with the technology. So obviously, I think the cost is going to be also on a rising side. And at the same time, I think you're going to see the marginal increase in the cost along with the higher amount of contribution to revenue. The data contribution also comes from the exchange business, which is also significantly positive. Anything
Okay.
which goes up in hurry, I think that might be a challenge. That is what my summarization would be. Good business, but if you are wrong valuation, I think you may get punished. So buy when I think market gives you an opportunity at lower levels.
Okay, buy right and at the right valuation, the key learning there. Let's also show you, you're able to see live visuals coming in from National Stock Exchange, MD and CEO Ashish Chauhan right there, sitting for the Diwali Puja amid the Muhurat Trading session, which is live, along with him, his family members also present at the National Stock Exchange as well. Vaishali, let me ask you on CDSL and BSE, these two particular stocks, these stocks are actually firing away in the Muhurat Trading session. Of course, the stunning rally that we've seen all through the year, last 6 months, year to date, we're able to see some stunning moves there. Anything that you're spotting on a monthly basis, yearly basis that you would like to point out for the entire Samvat now?
Well, this has been the stock on the radar for everyone. It has been a favorite pick. I guess no one has missed out on this trade. So ever since we saw a good trade coming in BSE, all eyes were on CDSL. And well, I would be happy to say that we have been recommending to all of our clients in this new round of momentum, even as a Diwali pick. And I still feel that yes, even on a monthly chart, it has given a breakout. So well, I would not recommend a fresh buy. But my target of 2100 is open, so I have a positive view on CDSL for now.
Let's look at some other sectors which are doing extremely well. We have REC and PFC both at days high. Devin bhai, one of the most secular trends that we've seen over the last 1 year is this rally on REC and Power Finance Corporation. Both of them are making consistent record highs, but their valuations still remain attractive. Are these zones to look at them constructively, or has the horse run away?
There is an opportunity which is still underway. I don't think that one should be unduly brought up about this opportunity. On one side, we have got higher amount of investment coming in power sector and now the renewable power sector. So obviously, I think there is going to be enough amount of opportunity both in the generation side as well as in the distribution side of the power where these companies are operating. Up till now, I think the challenge was that I think the companies were having struggle with the balance sheet. Today, I think that struggle is possibly gradually going away because I think there is a tighter control on the business. The policies which are in impression by the government and the regulators in the power sector, they are far more, I think, aligned with the kind of growth that is required in the industry. So obviously, I think the lenders like RFC, PFC kind of companies would not have the issue of balance sheet which they suffered, I think, in previous years, wherein I think they had to account for non-performing assets in a significant way. That situation seems to have come under control. And given that control, in my viewpoint, I think this company becomes, a good opportunity from investment perspective. However, I think the market is, moving far more ahead in advance, and that is a cause for concern. I'm repeating the same subject, I think, for one and other companies, that if you are buying something which is in hurry and probably, I think, buying expensive, you might probably have to wait for longer period of time to generate return in your portfolio. So you'll have to be careful about that aspect. RFC, PFC, both these companies have potential. Maybe I think current price have actually met the underpriced situation which till now was existing, has now come out, and probably these companies have come into the fair price mechanism. In my viewpoint, I think any correction in the market probably would make more sense to buy these companies into the portfolio.
Right. Devin sir, staying on with the power space, I wanted to take your view on Coal India as well. I mean, rarely have we seen Coal India moving almost 40% in 6 months, year-to-date basis 48%. A rally which has surprised so many people who've been only holding this stock as a dividend stock performer. Of course, interim dividend has been announced even yesterday after the earnings, 12%, 13% rise on the net profits. What would you say on Coal India, sir?
Well, I think again the important part. This government has made a point here that the whole India kind of companies which are till now languishing on the production front, at least I think they have created the situation where the production is now become consistent and has started becoming, or the visibility has started happening in the production area because of too many factors. One, I think the debottlenecking of the entire ecosystem. Second most important aspect is I think conducive policies on the mining. And as a result of which, we are seeing the higher amount of growth on a sustainable basis for Coal India kind of company, which is an extremely important point here because India has been importing coal. And out here, I think domestic production is giving you maximum amount of I think advantage to the companies like Coal India. Second most aspect is important aspect is the market driven price, which is being made available to Coal India as against the earlier period. And because of market driven price, even the power companies are producing power and selling at a market driven price. So to a greater extent, I think the feedstock provider like Coal India has actually started realizing the better value both out of volume as well as the pricing. We would remain comfortable with this particular story going forward as well. However, we will not be putting across, I think, too much of a large target for the price because I think they have a limitation in production. So if they keep on growing the production at around 10-15% rate of growth, probably I think that's good enough kind of a growth that one can assume as far as the stock price is concerned. So we remain positive, but at the same time, I think not very exuberant on the price target for this kind of companies.
Absolutely. And Sakshi, what's actually happened is that stocks have run up so sharply. All of them are above their 20, 10, 5, 8 EMA. It's very, very difficult to make a buy decision at this point of time, given the rallies that have already happened. One of the most dangerous things you can do to your portfolio is buy stocks at record highs and then repent at leisure. So you can buy a great company at an abnormally useless price, and that will result in a very bad health of your portfolio over the longer term. Be that as it may, it is the day of stock pickers, and welcoming another excellent individual, Mr. Sunil Shah. He's a fund manager at SRE PMS and a very, very well-known fundamental analyst of the market. Sunilji, namaskar. Welcome to Business Today, and a very, very warm festive greetings to you and to your family members. We've seen a very sharp rally happening in mid caps and small caps in the last Samvat. How do you see that sector as of now? And any picks that you can share with our investors for the medium to long term?
Yeah, Shailji, thank you for inviting on the show, and festive greetings to everybody, the listeners and your entire team. So, yeah, the last year which has been there, it has done phenomenally well for many of the mid-cap and the small-cap companies. However, going forward, I think the next year needs to be looked in two different parts. First, maybe the near term, which is the next 3-4 months or maybe 5 months or so. That's a pre-election phase. And I think and for that period of time, it will be more driven by the global events. The global events in terms of the interest rates and the implication of the global growth, which is going to be much muted. So that phase, we will see kind of FII selling the markets, and that is what has been going on right now. However, the SIP flows which are there are cushioning the market. So that's the trend which will be there for the first few months. That's like from December right up till February, March or so. Post-election, we will have to see how the budget gets formulated, which government comes into power. And that is how the market will take the next leg of growth for the return. So I think the next year from this Diwali till next Diwali will be split in two different parts. One would be the pre-election phase, which is kind of driven by the global events. And going forward, post the election, how the policy formulation happens. Having stated that, I think there are opportunities in the markets which are structural, which are great result oriented, and their growth is independent of both these events of global interest rates and the political fallout here in India. So I think if we identify those structural trends, that would be one of the best things to do, because irrespective of the situation, the numbers are going to come in, and that is where a lot of wealth could be made. So I think keeping this apart, we should look at those trends and try to identify the companies which come in that category. That's the thought process.
Okay, Mr. Shah and Mr. Choksi, please do stay on with us. We have to just quickly take a very short break. When we return, for all the viewers, the key themes that you need to note down for the next Samvat. We are going to be talking all about it. Stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome back. You're watching Muhurat Trading live on Business Today TV with me, Sakshi and Shail. And with us are two very special guests, Mr. Devina Mehra and Mr. Nilesh Shah is with us. Mr. Shah, I wanted to ask you on the broad theme that you believe that, could be a big one to track going forward, especially because in this entire year, one of the most common themes talked about by analysts such as yours is the manufacturing space, especially with the elections going to be underway. Is this going to be a theme that one should track for the new Samvat too?
Yeah, so in the manufacturing space, one important theme which I think is going to be there for a structural point of view is going to be the automobile theme. And Maruti Suzuki as a company took almost about 40 years to take its capacity to about 20 lakh vehicles. 40 years and 20 lakh vehicles. And the next 7 years, they are going to set up equal amount of capacity of another additional 20 lakh vehicles or so. So auto has a great trajectory, and one of the companies which come there is Uno Minda. Uno Minda is a company which is an auto ancillary space, and the fortunes of these companies are significantly linked to Maruti Suzuki and all the players in the industry. Now, this company has a multi-product and multi-customer diversified company. The main products of the companies are switches. Of the 3,600 crores of turnover, almost about 26% comes from switches. Then you have lights, which is about 23%. Then you have, the seat business, which is about 8% or so, and the alloy wheels, which is 21%. So I think all these products are completely ICE agnostic, which means even if electric vehicles comes in, all these products would be required. And the company's products are high ticket. So content per vehicle is going to be the driving force for Uno Minda. And if Maruti is going to double up, which even if we believe that it maintains its 40% market share, which means Indian auto sales will go up from about 50 lakh vehicles per annum to more than a crore over the next 6 years or so. So this company has a major tailwind, which is a beneficiary of the manufacturing opportunity in India. And the content per vehicle is going to grow for Uno Minda. So I think Uno Minda can be one such company which can find a weightage in the portfolio on the fundamental basis over a long-term point of view, because it's a mixed blend of the tailwinds to the sector plus the ability to increase its content per vehicle. So if industry is going to grow at an X%, they will have a 1.5 beta over the industry growth rate, which to my mind is very important. And I think Uno Minda will have a long runway of growth in the future. So that's one of the stocks that investors can look at from the long-term part of it.
Sure.
Right. Let's get Devin Bhai into the conversation again. Devinji, this time there has hardly been any participation in the past Samvat when you look at Nifty as a whole, just up 7% year on year. Not bad at all given the kind of problems that we've seen globally. But amongst the blue chips, are there any one or two stocks that you have seen as underperformers last year, which could turn tables in the present Samvat 2080?
Yeah, Shail, I think in fact the Nifty's underperformance is largely attributed to the blue chips not participating, like Reliance, like HDFC Bank, among others. I think these are some of the real good stories. I think that market is possibly not buying at this point of time, largely because of the technical reason. most of the mutual funds are having exposure, which is I think up to this level, which is I think almost 10% kind of a exposure limit that they have. In this stock, they already enjoy this particular exposure. On the other side, because they cannot buy into the portfolio, the hedge funds and the people who are basically hedging the stocks in the derivative market, they have a significantly large amount of play at this point of time by hedging the stock moment it goes up. As a result of it, this continues to be underperformed. According to me, I think the market's technical, which is possibly not allowing some of the large cap companies like Reliance, HDFC Bank, which are possibly having significant amount of high growth value to assume. I think these stocks are not being picked up because of this situation. So I would remain comfortable buying as an investor into the portfolio, given the situation at which it is available today. I would be comfortable buying into the portfolio likes of Reliance, HDFC Bank, likes of Tata Motors, even Bajaj Finance. These are some of the strongest companies possibly that one can ask for, and they are available today at a comparatively lower valuations than what otherwise I think it demands to be in.
Mr. Choksi, I wanted to understand your view on the Nifty IT, the blue chip IT stocks as well. Again, another sector which has not really performed that much. But will the bellwether companies return with a bang, Infosys, TCS, HCL Technologies, versus the kind of stellar performance that we've seen in mid-cap ITs? Or would you still put your weight behind the mid-cap IT stocks?
So I think mid-cap IT companies typically getting engaged into some of the niche areas, engineering, R&D included. I think they are relatively better preferred choice as far as I think the outlook is concerned. If the frontline IT companies are struggling to report double-digit growth, the mid-cap IT companies are reporting 20% plus kind of a growth. So I think that is where you are getting an opportunity. Likes of LTTS, likes of L&T Mindtree, likes of Science Technology, or even for that matter, Tata Alexi. These are some of the companies which are having a niche play in different areas in which they are operating. And we find that I think this niche is basically going to continue for next 3 to 5 years. That visibility is available. Because of that, I think we are getting an opportunity. Market is not giving the right weightage to the IT at this point of time. Because of which, I think we are getting an opportunity to buy into some of the mid-tier IT companies. So we would continue to remain buyer in this particular space when the market gives opportunity at lower levels. And I think that should be a good strategy, I believe, I think, to build the portfolio.
Right. Let's get Sunil Bhai into the conversation. Sunil ji, we've been discussing two stocks in particular with all our guests, Bombay Stock Exchange and CDSL. BSC, everybody understands that the rally has been driven largely by introduction of newer options products and a very sharp rise in turnover. How do you explain or justify the rally that you are seeing in CDSL? Is the counter overheated or is there more to go?
Yeah, Shailji, so I understand we are talking about CDSL. So to my mind, one recent news which has come through in the company in terms of the demat of shares of private limited companies. So the opportunity for CDSL is going to be humongous. Now let's understand that there are about 5,000-6,000 companies which are listed. But there are almost about 15 lakh companies which are unlisted which come in the category of private limited companies. Now, in that, the regulation has come that companies with a net worth of more than 4 crores or a revenue of more than 40 crores necessarily have to be in the demat form. So this opens up almost about 10x the opportunity of the listed companies. Almost about 50 to 60,000 private limited companies come in that category. Not that the shares of these companies are going to get traded just like the public sector company shares get traded on the stock exchanges. But this opens up a new, interestingly, a fixed revenue stream for the company. So I think CDSL will benefit at least from this one trend. Second trend, which I think will be really gaining momentum, will be in the post-election phase when practically majority of the asset class will come in the digital form, at least the financial asset class. So we will see insurance policies also get in the demat form, and eventually maybe even the bank fixed deposits will get in the demat form, because ideally the government wants to track each and every investments in a digital form, and so that it can be more better regulated. We have seen that happen in the stock market. Now we are seeing it happen in the private limited companies and eventually in the insurance as well as in the bank fixed deposits. So the runway of growth for CDSL is going to be tremendous over a long period of time. And each opportunity is almost 10x of the preceding one. So if there are about 5,000-6,000 companies which are listed, you will have a bouquet of about 50-60 private limited companies. And 10x of that number would be the number of insurance policies. And maybe 10x of that number could be the number of fixed deposits that we have in the country. So all this, to my mind, gives a super runway of growth. Plus, the company has zero debt. It has a free cash flow. It is having about 50% net profit margin. So all these ingredients are of a great, traditionally an FMCG company kind of a business. And the valuations have recently run up. The stock has seen a massive price appreciation in maybe less than 1 month of about 35-40% or so. It's one of our portfolio companies and we like it very much. But I think at a decent price correction, sometime maybe in the month of December, if there is any negative news from any of the state elections, or if market gives an opportunity to add this company, one can look at adding up CDSL, given that various asset class are eventually come in the digital form. And CDSL is the only choice that we have which can capitalize this digital opportunity of asset class coming under it. So I think CDSL should be looked at an appropriate price, wherein investors can invest and then
So Mr. Shah, what would your target be for the new Samvat for CDSL?
I think the company is a good 20% compounding story. Even from this price, I think it should compound at that rate for the next 2-3 years from a reasonable time period of time. So I think that's the way I would try to look at CDSL as a 20% easy compounding from here on.
20% compounding on an annual basis over the next 2 to 3 years. So strong uptick can be expected on CDSL. All right.
Sorry, I missed that. Sorry, can you come again?
Sunilji, we've discussed stocks in the 4 digits and 3 digits. Anything for our investors who look at small caps? Where do you think lies value at this point of time?
Yeah, Shailji, so there is one small cap company. I think it is still under researched and relatively unknown story is PTC India. The name of the company PTC stands for Power Trading Corporation. And in Power Trading Corporation, a recent news has come across that the company is going to sell off its power PCC subsidiary, which is the PTC Energy business, to ONGC for a consideration of close to 2,000 crores. So once this transaction happens, there are some certain terms and conditions attached to the deal. But once this transaction happens, 2,000 crores will flow in the company. And this will help to reduce the debt of the company. The debt of the company is more than 5,500 crores. And a saving on account of retirement of debt will result into 200 crores of reduced interest outflow. So PTC India did a profit of close to 500 crores in FY23. And I think in FY25, the numbers of the company could be upwards of 800 crores or so. So PTC India currently has a market cap of 4,000 crores, a PE ratio of less than 10, a dividend yield of more than 5%, which is a complete value buy. And if we add this cash flow which will come in the company and a profit of about 800 crores, it can have a market cap of about 7,000 to 8,000 crores or so. So this is a 1.5 to 2 year kind of a story. The caveat is the transaction should get through with ONGC because there are some terms and conditions attached to it. So if that gets fulfilled, the transaction will happen and then numbers will come in. So it's all about the transaction happening and PTC Energy getting transferred from PTC India into the books of ONGC. It's a blended transaction of equity and debt. Almost about 1,100 crores of debt will move and 900 crores of cash flow will come in. So that's one of the relatively small cap company which has got potential to deliver good returns if this event of sale happens. That's the one to keep a watch on.
So again a target here, sir?
I think if this happens, the market cap which I stated is about close to 4,000 crores. We will see a market cap of about 7,000 crores, so which gives you a good upside of about almost about 75% from here over a 1.5 period, provided the transaction sails through. So it's an investment call. dependent on the event. That's the way I would try
Wow.
to look at it.
Okay. Stellar returns can be expected here. We'll take a very quick break right here. But when we return, more stock ideas, more thematic ideas for the Samvat 2080. Stay with us on Business Today TV.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome back. You're watching Muhurat Trading live on Business Today TV with me, Sakshi, and Shailendra Bhatnagar as well. And with us is a very special guest, Mr. Sunil Shah, Fund Manager, SREPMS. Mr. Shah, another space I wanted to ask you on is the PSU banking space, especially the second-rung PSU banks. We've discussed them many times over on our Market Today shows with the kind of stunning move over the last 3 or 4 odd months as well. Your own thoughts of the kind of rally that we've seen. Is it done and dusted, or will it continue for Samvat 2080? And any particular stock that you want to highlight for the new year?
Yeah, so in the PSU bank, I think this pocket has got still a lot of steam left. The valuations are still available at a very moderate levels. If I just name maybe companies like a Bank of India or a Canara Bank, I would still like to be in the top rung of the companies, the top 4 or 5 players which are there. The NIM expansion has happened for the company. The NPA write-offs are all behind us. And what is more interesting is the valuation gap which is still there between the public sector banks and the private sector banks. The public sector banks are enjoying very high ROE ratios on account of the clean balance sheet that they have at this point of time. But the valuation gap is still significant. So if I'm just naming private sector banks, they quote at a price to book value of almost about 3 times or so. And we have public sector banks which are quoting at about 1 to 1.2 times or so. So the valuation gap is high, and the ROEs of the public sector banks are inching up closer to the 12% mark versus the ROE of the private sector bank, which are upwards of 15% or so. So the ROE gap remains, but the valuation gap is still significant. I think the public sector banks will give still good returns to the investor community. The results which have come for many of the large public sector banks still indicate good growth. The credit offtake is very strong. And if we just understand the country's almost about 25% of savings which is there. So on a $3.6 to $3.8 trillion, $900 billion of savings is still getting channelized in the public sector banks, which has got a wide network throughout the country. And now with credit offtake being very strong, as has been indicated by many of the companies during the con call period right now, I think public sector banks still offer a lot of opportunity. But having stated that, I would like to be in the top rung of companies, the one which is in the second league after the top one, which is the SBI and PNB. So I would like to be in the Canara Bank and the BOB space is where I think still a lot of steam is still left in both these companies.
All right. And we are seeing a 6-year breakout on Canara Bank at the moment. The prices that you see, 385, 395, were last observed in November of 2017. Of course, Bank of Baroda is on its trajectory to take out its previous all-time high of 225 rupees. Relative safety there in terms of how the companies have performed, very strong balance sheets and a very strong buying traction being observed there. Let's just do a market check now. Sakshi, we have 19,521 on the index, up 97 points. Nothing much happening on Nifty Bank. We had opened where we are, 162 points higher, 43,982. In fact, let's just do a broader check of the market before we welcome Punita Kumar Sinha. The advanced decline ratio is firmly in the favor of bulls. 700 shares in the green on the National Stock Exchange compared with just 324 in the red. And Sakshi, we track 19 indices. All 19 of them are in the green. The top gainer today, of course, is the small cap index, up 1.2%. Remember, the small cap index was also up 37% in the previous Samvat. So this one starting Samvat 2080 on the front foot. And what's exciting in cricket is that the Netherlands have lost their second wicket. It's 66 for 2. It's a great Diwali that's shaping up, Sakshi.
Welcome our special guest, Ms. Punita Kumar Sinha now joins in, Managing Partner, Pacific Paradigm Investors Advisors. Welcome, Ms. Sinha, and thank you so much for taking the time out. A very, very happy Diwali to you. I want to first ask you, your top lesson that you have learned as an investor over the last 1 year and the big winners that you would be looking forward to in the new year.
Well, first of all, happy Diwali to you and all the viewers. And in this today in the Muhurat Trading, I'm glad to see the markets are up, because that's signals a good year ahead, hopefully. So on your question on what is my top lesson learned in the last 1 year is that don't underestimate the power of the domestic investor, because the domestic investor is really what has carried this market, particularly the mid and small caps. If you see the mid and small cap funds and how much money is flown into it, a large part of that has come from domestic investors. And so I think the power has shifted in the hands of the domestic investors versus the foreign investors. Foreign investors are still important, but not as important as the domestic investors. And because our Indian investors don't have much opportunity or flexibility to invest overseas, that sheer force of money comes into the Indian markets. And that is what has been driving a lot of this small and mid-cap rally. So my lesson learned is don't underestimate the flows that you're going to keep seeing from domestic investors.
Namaste Punita ji, what a warm welcome the markets have given to Samvat 2080, and it's a pleasure to host you, ma'am. You've been a large cap picker for the most part of your professional life, and that has done wonders to your shareholders as well as to your personal portfolio. Somehow, Samvat 2079 passed by without the likes of Nifty or major blue chips doing anything substantial. How do you see the year from now on as far as blue chips are concerned, and where would you deploy fresh money?
So I think that's a great question. I mean, as a foreign investor, we were obviously, we didn't have the liquidity in the small caps and mid caps to put large chunks of money. And so by default, you really end up buying the large caps. And that's still the case. I think foreign investors are hard pressed to put lots of money into small and mid cap sectors. But small and mid cap sectors are the ones where the growth rates are obviously exponentially higher because they're coming from a much smaller base. There's also more risk because not all the companies are going to be able to meet their targets and capture market share. So it's a little riskier sector. So it also, there is a higher return for the risk that one is taking. But increasingly, I think many of these have transitioned from small caps to mid caps, and some of the mid caps have become large caps. The large caps, you're right, are seeing growth, but that growth is more like nominal GDP growth. Very few of them are going to grow a lot higher than 15 to 20%, and even 20%. I mean, the revenue growth is in single digits in most cases.
Right.
But that segment of the economies or the market is also better valued right now because it's been ignored to some extent, and it's also higher quality and comes with a cushion of safety.
Right. Ms. Sinha, where would you be deploying fresh funds for Samvat 2018 now?
So, it's a tricky situation because the markets have run a lot. The valuations are not cheap anymore. Of course, the momentum is very strong, so the flows keep coming. So I think you have to keep some money in mid and small cap, but you also need to start looking at some of the large caps, some of the defensive names as well, because while India growth story is still very good, I think the geopolitical situation is being largely ignored by the markets. And at some point, if the geopolitical situation escalates and more countries get drawn in, that would be negative for all the markets, and India would also be negatively impacted in absolute terms, or in relative terms. India is still a shining star. And so I think, given that there could be supply chain bottlenecks if the geopolitics situation gets worse, one should focus on companies that are domestically and inwardly focused to a large extent. So I think that's a space to keep on focusing on.
Right. Punita ji, the good thing about your interactions with a wide variety of foreigners is that they bring that granularity of thought when it comes to investing in India. As of now, over the last 4 months, we've seen our foreign friends take away money because of the way how US 10-year yield has performed. But when you talk to them offline, when you chat with them on dinner, when you speak to them about how they are thinking of how India is shaping up, what are the 2 or 3 points that come out as commonalities?
So the first point that comes out is that India is an alternative to China. And a lot of investors are like really negative in China. But if so it's really benefited from all the outflows, because all Asia funds, EM funds, the benchmark weighting is much higher in China than it is in India. And so by default, if anyone who's overweighted India has outperformed the benchmark. So people are keeping a keen eye on the China situation because the valuations have become quite cheap there. And so that's one thing that everybody is keeping an eye on. Second, if you're sitting in the US or outside India, you can't help but looking at the yields, the inflation, the geopolitics. So the global macro is not as good. So that is why foreign investors have been a little bit more conservative towards equities as compared to domestic investors.
Right. Punita, I wanted to understand from you, especially when we talk about the runaway sectors, railways, PSUs, defense, will they continue to perform in summer 2080?
I mean, the growth can still come through. I'm not so concerned about growth. I'm just more concerned about valuations and what the valuations are baking in terms of growth. And if there's any disappointment on the growth front, then the valuations are poised for perfection, right? So there is not a valuation support to many of these companies. And in the past, we've also seen that small and mid-cap sectors can do really well. But when things go wrong, then if everyone tries to sell, then they really don't have the liquidity and they can crash quite a bit. And we've seen that in 2008. We've seen that happen in other periods of crises where the mid and small cap get crushed and then it takes them 3-4 years to recover. So I think one has to be a little bit more focused on that. But having said that, I think this time is a little different for 2 reasons. One, China is failing. So the alternatives are bad. And of course, unless China again recovers. And the second is our domestic mutual fund industry is far stronger than it was in the 2008 or previous crises. So, and this retail investor has no option to invest in too many other asset classes. So it comes into equities. And so that SIP, that systematic investment plan, that wasn't there in the same way in the past. So I think we do have some support to the small and mid caps. And so I would say whether it's railways, it's defense, most sectors in India are growing. So one just needs to, growth is not an issue, just focus on valuations.
Punita ji, given the rally that we have seen across the board, PSU banks, mid caps, small caps appreciating on the index level anywhere between 57% to 40%, are there still some pockets of hope, pockets of under ownership, pockets of relatively cheaper valuations left in the Indian market, or are we now in a pure momentum zone?
But yeah, I think to quite an extent we are in a momentum zone, but there are pockets of valuations like PSU banks. I think are still they've not really had as strong a run as some of the other companies. So I think there is some value in the whole PSU space. IT is got value as well. I think healthcare as a theme is growing. There is some value there as well. Real estate is another sector that's seeing growth. So there are lots of segments of the economy. Even certain auto stocks have, good valuations. So across the board, you can find stocks that you can invest in. But of course, you will not get the same kind of returns from here on.
Okay. Looking at how the Indian markets have performed, Punita ji, there has been some extreme form of exuberance in the SME IPO space, as also in the domestic IPO scene. Are these signs to be worried about for these two specific markets, or this is a characteristic of a bull market that we've seen often?
I think the IPO market has definitely slowed down from what it was earlier, and many, not all IPOs have been going up. So one has to be careful. And in fact, many companies, we are only seeing the companies that are making it to the IPO market. There are many companies who are also not making it to the IPO market. And of course, the SME market is very strong for the same reasons as we've seen in the small and mid-cap space. People are, to a large extent, ignoring risks and only focusing on momentum and growth. Everyone is looking for the next idea that could multiply. And that is typically a sign of a bull market. And I'm not saying we are at the tail end of the bull market. We are not, for the reasons I outlined. But there are global concerns, geopolitical concerns. So we may have corrections. From here on, I don't expect the same kind of returns that we got this year, next year.
Okay. Punita ma'am, what about the internet companies, the likes of Zomato, Nykaa, PB Fintech and Paytm? Most of them have reported second quarterly operating profits. The commentary has changed. Are you looking at them positively? Will they give finally the kind of returns investors have been hoping for in Samvat 2080?
Well, I think the business is now beginning to perform. So a lot of companies that were at losses are not now in this space beginning to show profit. So I think you have to give it some time for them to build a track record of profits. And I think that is their scale. As their scale is building up, they're going to generate better profits. And I think that at some point, these stocks will also start to perform. Right now, I think they came in at very high valuations and the earnings didn't justify those valuations. But I think as the earnings start coming through, at that point, the valuations will start looking more in line with what the company's growth prospects are. And then you probably will see some returns coming.
Okay. Well, on that note, thank you so much, Ms. Sinha, for being with us on the show and discussing such wonderful insights on this auspicious occasion with all our viewers. Here's wishing once again a very, very happy and prosperous Diwali to you, to your family members and to your entire team.
And thank you and happy Diwali to all the viewers again.
Thank you so much. We'll take a very, very short break right now. But when we return, ladies and gentlemen, the best of market voices in 5 minutes will tell you what you need to know and what you need to do over the Samvat 2080. So stay tuned for that.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Welcome. You're watching Market Today's special edition on Muhurat Trading Live, Business Today TV. But this is where we tell you what you need to do over Samvat 2018 now. the top market voices. We've collated all of their best, bites in a bite belt. So 5 minutes is what you have, and you note down all of it that they tell you over this 5 minutes.
I've always believed in quote of Warren Buffett, there's no one who can predict tomorrow. So all these predictions about where markets will be 1 year down the line are unlikely to be true. I have experienced myself that I have no ability to predict future and hence stop predicting long time back. If you are investing in equity, don't invest summer to summer. You invest for a longer period. हमारे यहाँ पे प्रथा है कि धनतेरस के दिन हम सोना घर पे लाते हैं. You don't buy sona for one summer to another summer. सोना घर पे ही रहता है. Do that with quality equity. Keep it at home. There is a tagline in a Swiss watch, Patek Philippe, that you merely pass it on to next generation. Quality stocks are like that. You pass it on to next generation. Don't play summer to summer. Play generation to generation.
First thing is that anyone looking to invest in the stock market should not have a 1 year view, whether backwards or forward. So it is not just what happened in the last summer, but what's happened over a period of time. And that part is really interesting because, all of us think that equity markets compound 15, 16% because that's been the long-term compounding since Sensex started. But what most people don't realize is that in theory, we know equity is a volatile asset class, but what many investors, and especially, many investors are new in the market, don't realize that variation is not just from month to month or even year to year. It can be very dramatic, even decade to decade. My key takeaway for investors would be that always look at data and look at long-term data. So don't fall for someone saying that I have given 60% compounded return for the last 2 years in micro caps, because when something falls 2/3, it can triple and you will still be at zero.
As we speak in 2023, the Sensex is up about 6-7%. And this is the 8th year of consecutive positive returns. So, as we speak, we are actually in a dream run. And as you rightly mentioned, it's because of the resilience of the Indian economy. And we are here in positive territory in 2023, even without IT sector, which is one of the largest sectors in the index, having performed. The IT has not done much. A lot of the global commodities have not done much. In spite of that, we are in positive territory, which just shows that the Nifty or the Sensex, which represents the broad market, is quite diversified, quite resilient. And I think the delta of India versus the rest of the world has never been higher. So the Indian story, relatively speaking, is the strongest that I've seen in many years versus the rest of the world. And that bodes well for the next year.
It's going to turbocharge our economy further, and it's going to compel very large foreign investors to kind of come in and be invested into India. And so clearly, we are going to see a huge surge of liquidity coming in. So the outflows that we are seeing in recent months is going to convert into inflows. And I think probably between April to September, we received $20 billion, I think, of flows, which is annually $40 billion. Just imagine if that actually doubles and becomes $80 to $100 billion annually for the next 4 to 5 years, the kind of FDI that we could see if India is targeting more than $1 trillion of spending on infrastructure by 2030. So clearly over the next 4 to 5 years could be really the first phase or the trailer of the Amrit Kal that we all are longing to see over the next 20 to 25 years. So I think if these were the things to happen, clearly over the next 4 to 5 years, I wouldn't be surprised if India ends up being one of the most outperforming public markets globally. I mean, we saw that with Japan in the 80s, and we've seen different countries of that kind. And it's quite possible, and we talk about this decade being India's decade. It's quite possible that in 27, 28, the timeframes that you alluded to, we could truly be cherishing India's decade.
We do think that there are a lot of opportunities still in the mid and small cap space. We like the domestic facing engineering, infra, cap goods kind of space. We are actually overweight in this space, and we are underweight in the more popular sectors and themes, which is the large private sector banks. We are also underweight large IT stocks. We like mid-cap IT. We think there are some real gems out there. We like healthcare, apart from pharma, which is very interesting. But still, as far as we are concerned, a large, big, overweight bet continues to be capital goods, engineering, infra, because we really get a sense that the capex cycle is reviving, and these companies have done well in the last year. Wherever they are executing well, wherever the numbers that are coming out are good, I think I have a lot more opportunity, because I remember that very often when stocks move, we think, oh, this just run up, it's a bubble, etc. But if you've experienced 2003 to 2008, you realize that a lot of these stocks can move many times more, and it tends to be elongated. So we get a sense that we could be in that sort of a phase.
All right, so that was the top market voices telling you what to do and what to expect over summer 2080. The markets have definitely given impressive returns on the Muhurat trading. In fact, one of the best sessions over the last few years. In fact, Shell, we are up 0.5% on the major index, and all the sectors up into the green. Smiling away. I think Goddess Lakshmi is blessing all the investors on day one itself.
Absolutely, Sakshi, and whatever batting performance that you saw on the Bangalore pitch got reflected on the Lal Streets today, and we look forward to a fantastic year ahead. A lot of investors who watch us, who send us questions, often ask that the markets are now at record highs. What is the point of entering at these levels? And it is you people who have made money over the last so many decades. When our time comes, the markets are at record highs. I would just like to add one observation that I have had over so many decades, is that Nifty is a compounder. And no matter what time you get in, the job of the Nifty is to go higher and higher, of course with requisite corrections. The last one that we saw, Sakshi, was from 20,200 to 18,850, and while you were doing the afternoon shows, we had talked about buying the mid-cap ETFs as also the Nifty and the banking Bs. So for those people who can buy fear at a time when quality is not at a question mark, stocks like Pidilite, stocks like maybe Poonawalla FinCorp, these are the ones that make supernormal return not only in the first 6-7 months of your purchase, but buying the dip is an extremely beneficial exercise even in the longer term when it comes to Nifty or Bank Nifty. So keep on putting your SIPs in place, invest for the long term, and believe in the market story that's unfolding as far as the Indian economy is concerned. Sakshi.
Absolutely, and thank you so much, Shell, for being with us on this special Muhurat Trading Live on Business Today TV. I'm sure all our viewers really enjoyed this entire session, and they have actually got the best of the advice that there is on stock markets on this entire 1.5 hour session as well. And with that, we wrap up this session, but we will be back with Market Today tomorrow morning and tell you what exactly should you be doing in the next trading session as well. So thank you so much for being with us. Here's wishing all of you a very, very happy and a prosperous Diwali and a new year too.